Welcome to TradeTheMBI.com. This is John. This report is for the 8th holiday here in Europe. For the Annunciation, the overall upside move continues. So Santa Claus rally still in effect, albeit modestly very slow. Not a whole lot of short activity from what we're seeing here. And magenta over the yellow on the MBI reading. It's fairly clean. And you can see here even orange still caught between cyan and red on the DOC, and that's a continuation as well. So shakeout been in the positive. It's starting to pick up a little more momentum to the upside here, and that's something that definitely needed in a push towards the 100%. So now you have to get there because you start to break down from here, and it's problematic. Of course, the Fed is going to be, giving an announcement of some kind. Whether it'll be anything relevant remains to be seen. But the question is, will we start to see some form of quantitative easing, given how sporadic things are, or are they just going to hold the line and see if inflation and everything else just fits within their model? And the reality is they've been predicting astronomical inflation for quite some time. It just hasn't materialized, and how they justify any of that stuff going through, we'll tend to find out later on. But none of their models worked. This basically the simple description of it. None of it worked. They were completely off. And so, from a Treasury standpoint, we're literally back where we were in September. It's just identical at this particular stage, and that's just because, frankly, the deficits are still astronomical and going to continue to be a drain. The fact that oil hasn't moved in the slightest bit allows people to catch up, but it certainly hasn't been any help whatsoever from an economic standpoint. So it's just a lot of delay and a lot of problem. It's not really affecting the large corporations so much as really impacting small and middle level companies, and that's been a drain on activity as far as anything realized for regular individuals. And at the end of the day, the consumers still haven't recovered from the inflationary spike, and I think that's just having its toll, and probably going to continue to do so, given that there hasn't really been much relief from a energy standpoint. And it just is what it is at this particular stage. The euro, hyperinflated relative to where it is economically, and that's just because their plan is to spend for weaponry and that kind of thing, because they want to continue the war, and so that's going to be their new cash cow. Borrow to support both Ukraine as well as their own internal industry of weaponry, and we'll see if that's a sustainable move. They still think that the U.S. Economy is imploding, so that's also where traders have kept things more elevated than I think they should be. But from a gold standpoint, it's still a net positive for gold overall. It's going to continue its ride, particularly as we start to see more and more of the deficit numbers come through for successive quarters. It's not going to change. It's not getting any better, and no matter how many efforts that you hear about on improving for fraud, waste, and mismanagement, it doesn't change the fact they're still spending way too much, and there's no change of that in the horizon. From a crypto standpoint, they're still suffering in their little midwinter blues here, even though we're still in fall, and that's really going to be relative to market changes and adaptability. ETH, likewise, the same situation. And you've sort of reached this maturity level with crypto that's just not. It's either going to get an adaptation where it's more functional, or just remains a fringe outside situation for high speculation, parking money outside of fiat currencies. So, before, where we used to talk about arbitrage between different currencies, now your crypto has become that opportunity, even though it still has tremendous volatility within its broader range. From a 50K standpoint, you can see this is just pretty much dead in the water. We had this slight increase early on, faded back somewhat, still relatively positive overall. You had the MBI weight spike at the start of the day, but with magenta riding, that was the short rally cover that pushed things. And then once magenta dipped back below, that's when it all started to fall apart. And that corresponded with the blue crossing the gray line right there, and we turned to the purple, and that's where we ended up. And best we got was just a move down to the 50%, which was fine. It's pretty congruent within that. Overall, to start out with, we're looking at a little bit of an upside bias at best. It's pretty modest. Intraday, you had the big spike up, and it just faded all the way back. So I mean, that was just a pump and run, and then fill it all back in, and it just deals with the options and gets everybody neutralized. The Asian session is was pretty decent, and then from the European standpoint, a little bit of a fade off from within that, but pretty much flatline. So not a whole lot of excitement. We'll see what the Fed has to do. I think people will be waiting to see if there's some encouragement or whether they start a form of quantitative easing or not. And we'll go from there. As always, anything relevant, I'll put on the team chat. Have a good one. Trade well.